So a story in MarketWatch argues that the proposed new tax bill will end Roth IRA conversions for almost everyone, even those who earn less than $400,000 a year. First, that's concerning to me. Is that true? And second, if it is true, should we consider a conversion now before those changes become law?
Yeah, you should. I don't know. This is a tax bill. You know how many crazy things get on? There's one tax bill that said all IRAs and pre-tax 401ks were supposed to be given to the government. They're supposed to give us a check like Social Security. It doesn't ever go through.
Yeah.
But they try to put it in every year. So, look, the government does actually get a lot of tax revenue from Roth conversions. We're basically paying the tax.
Oh, okay.
So I'm not
in advance. Yeah.
I'm not sure that
we talk a lot about Roth IRAs.
Right.
That's a concern.
Yeah, it is a concern, but basically the new tax bill on capital is going to scrap Roth IRA conversions for everybody after the end of the year. And no, that's not just for anybody earning over $400,000 a year. So it's going to prohibit all employee after-tax contributions in qualified plans. And it also prohibits after-tax IRA contributions for being converted. So it's kind of basically saying it will end a practice called backdoor Roth. I think we've talked about backdoor Roth.
You have.
Yeah. So backdoor Roth is somebody that's a real high income earner, can't normally put in a Roth. They make $300,000 a year, and or it's really about $200,000 or more, but they put into an after tax and then convert it, and they basically are putting it into a Roth even though they can't. But there's some rules on that. You can't have a standalone IRA, or there's a pro rata rule. So it's very confusing, but they're talking about getting rid of all that. Now, talk is cheap.
Mm-hmm.
Until they implement it, we're not going to go change anything at this
point. So convert now?
Yeah, I mean,
while you can?
Well, I'm telling people right now, we just had a client who did a tax plan for our CPA, went through and entered the information in the tax software, said, hey, you should probably convert about $140,000, to get you to the next tax bracket, because it's about tax bracket planning, right? It was like 24%. And okay, well, yeah, you're going to owe some tax on that. But after that, all that money's yours.
Yeah.
It's yours.
Won't be taxed coming out.
And then you say, well, do you think the government's going to increase taxes? Well, yeah, of course. Okay. So you're paying the tax on your debt right now, basically, is all you're doing. When you think about it that way, you never paid the debt. You got debt. You were bragging to me about how you paid your house off and it was all debt free, and you don't have any debt on the cars, and you don't have any debt, but you have a debt on your retirement. If you got $2 million, you think you're debt free, you got $600,000 or $700,000 that you really owe to the government in taxes.
Mm-hmm.
That's assuming taxes stay the way they are.
Yeah.
So you just have to start looking at converting as much as possible. I don't think they're going to get rid of it. I don't think this is going to pass. I think there's too much revenue that the government would kind of lose. I mean, essentially, because we convert a lot.
Because of the taxes going in.
Well, the taxes, yeah, you're being paid. I mean, We're sending all kinds of money to the government because these people are going, Brian, I don't need all this money. Well, that's good, but that's a good spot. If you don't need it, why are you going to pay a required minimum distribution tax basically at 72? That's you're just giving money away.
Yeah.
Hundreds of thousands in some cases. Like, why come nobody's talking about it? Well, it hurts. There's pain. It's kind of like having a physical trainer, a personal trainer that's yelling at you all day long and screaming at you to get in better shape.
Feel the burn.
Let's
it
go
burns
now.
so good.
Right. And while you would look great and feel great after it, it's still pain. I don't care which way. Right. Even
it's
these
pain in, you look good out, but it's pain in.
Right.
Kind of like a Roth, yeah.
Right. And so you got to have some pain going in. But will you appreciate it more in 3, 5, 10, 15 years when you're saying, that's all mine? That's not all mine. The IRA or the other account.
Imagine what my butt would have looked like had I not done all of these.
Exactly.
Yeah.
Now, we're just trying to work out getting we're going to get a personal trainer and the financial planning in together at the same
There you go.
time. So we can get your health figured out.
Yeah.
A dietitian, the wealth.
So when they're in your office, they'll be on a Peloton.
Yeah, right. Yeah, exactly.
I like it.
Come on, let's go.
More.
Next, we're going to talk about tax planning. Okay. And stop eating garbage.
Yeah, right. So Brian was talking about the second opinion service, such an important thing. So what, you've been with someone for 25 years, worth getting a second opinion. Things could be done better, differently. Maybe you get something from Integrity Financial Planning and you take back to your financial planner. Regardless, if you are interested in the second opinion service and you've saved at least $1 million towards your retirement, call Integrity Financial Planning. 866-2-PLAN-4, 866-TO-PLAN, and the number 4.